and welcome to the Investing on the Go podcast. I'm Chris Sarley, and today we're joined by David Harrison, manager of the Rathbone Global Sustainability Fund. Thanks for joining us today, David.
Thanks, Chris. Lovely to be here.
I wanted to start by talking about the fact that it's 5 years since the UN Sustainable Development Goals were introduced. Could you please tell us what the aim was with these and how successful they've been in the past 5 years, and perhaps also maybe where they also need to make some improvements?
Yeah, so it's a great question. So the United Nations Sustainable Development Goals, or the UN SDGs, were introduced in 2015, like you say. And I guess the biggest aim of them was a kind of a global call to action to solve a number of issues. So there's 17 goals covering everything from resource efficiency, tackling climate change, thinking about sustainable infrastructure, and reducing inequality. And these were really important because they were kind of one of the first global frameworks that has been adopted, and being very clear in what they're trying to achieve. You know, there's 17 of them. There's specific focus on individual issues, whether it might be around kind of water usage, say inequality, other specific goals around innovation. And they've been incredibly important, we believe, in bringing the sustainability conversation forward because of their global nature and the fact it kind of gives you, a level playing field to talk about these issues. I'd say in terms of how much we've achieved and where we need to get better, if you look at the most recent UN report on the sustainability goals, you can see on some of the goals, we're falling well short. So some of the action around climate change, some of the action around what we're doing to the environment, but other goals we're doing better. Particularly around access to healthcare, gender equality in government, for example. So, clearly, COVID brings in a new dimension to this as well. This is not a time that we can relax on these goals. There's clearly a lot to do. We've only got 10 years left to help try and achieve them. If you think about the successes and with respect to perhaps the investment community and how we think about we can use the goals for positive change in our investments, I think there's been a lot of success. Firstly, the way we do our job, we've integrated the UN goals into how we manage the fund. And it allows us really to, when we speak to companies around the world, to have a common framework, a common language. So I think the UN goals from that respect have been very, very powerful. And also, we would argue that the UN goals have accelerated, subsequent regulation and legislation. So if you think about EU taxonomy and some of the climate specific goals that are coming through in Asia and the UK, for example, the UN goals have been very strong in driving this. In terms of how they might be improved and finessed in the future, there's 17 of these goals. Some of them are kind of very almost cause conflicts with what they're trying to achieve. For example, how we achieve zero poverty, but also do that in a way that we do it in a very responsible way in terms of our carbon emissions, how we treat the environment. These are things I think we need to think about for the future. And the other thing I think that we need to improve further is disclosure. So if we think about companies when we go to see them, is there a common disclosure standard? Should they be required to integrate the UN goals into how they run their businesses? These are things that we'd like to see in the future.
Okay. You touched on it a bit there. Could you maybe just talk a bit more in detail in terms of how these relate to the funds following its launch a couple of years ago, and sort of how they work in practice for the fund? Maybe give us an example or something along those lines if possible.
Yes, so we kind of use them in two ways on a day-to-day basis. Firstly, I mentioned that these goals are a great global framework. So we can compare maybe a business in the US, business in Asia, across different sectors. So an industrial company with a chemical company or a healthcare company. And when we go to meet a management team, we will use the UN goals as a key tool really to identify if a company company is sustainable or not. More and more companies are using the UN goals in their annual reports, and we find them as a great way really to kind of separate the companies that are walking the walk versus those that might potentially be greenwashing. We want to know from the management team, are these goals integrated into your financial returns? How do you build your business? And as a tool and that kind of global language in terms of investment, they're very, very powerful. So that's the first thing as a practical tool. The second thing is that we've integrated the UN goals back onto our own sustainability framework. So we can show our investors in the fund, how much the fund is exposed to each UN goal, how that changes over time. So it's really to give our investors that complete transparency about the positive impact that we're achieving stock by stock and at a portfolio level.
We spoke back in April at the height of the sort of first wave of the pandemic, and we talked about company responses, for example, how they were treating employees, etc. And with furlough schemes ending and the like, how is company practice continuing? And is it still as good, or has economics and survival sort of taken the front seat?
So this is something that we engage with our companies all the time. So back in April, we spoke about this, that we'd reached out to all our companies. We wanted to know really about how they were behaving to all their stakeholders. So like you say, their employees, supply chains, and wider communities. And that's something that we keep doing. So, that is part of our daily work as engagement, holding the companies to account, making sure there's commitment from senior management, and that commitment's ongoing. We're still seeing that with the companies that we own, and it's a prerequisite that they continue to do that. If a company doesn't live up to that behaviour, then it won't be in the fund. It's something that is really important to our kind of investment philosophy. So we are seeing it for kind of a lot of our opportunities. I'd say from a wider point of view, a couple of things. I think, well, very importantly and positively, what this has raised has been the issue of company behaviour. People talk about the ESG, the S part being highlighted through COVID, and we have highlighted those issues. And that's something I think we have to kind of take forward and build on in the future and hold companies to account. I think, unfortunately, there'll always be examples of companies that don't think about the S part. They don't think about their behaviour to stakeholders. They might often be in very challenged kind of areas of the economy, or a company that's facing a very uncertain financial future. But it goes back to, again, in terms of our strategy, that why we focus on quality, why we focus on high quality companies that are more financially secure, that can think about these ESG issues at times of stress, and it's really integrated to kind of their core operating kind of DNA, as it were.
You mentioned the high quality companies there. The fund has sort of performed well since the sell-off in February, March. Could you maybe give us background about why that's been the case, and what specifically has worked for you?
Yeah, so kind of from that quality point, I think that there's two big drivers. The first is that quality. I often speak about it's central to our investment philosophy about owning durable franchises. So well-run companies that have strong market positions, good management teams, and that quality focus has clearly helped us. Clearly we're going through a time of volatility and stress. And what we're seeing is that many of our companies are actually coming out of the crisis in a strong position. In many cases, their ability to work with their customers, to our previous point, work with all their stakeholders, that is something that has been rewarded in the market, and again is a core part of our philosophy and will remain so. I think the other point really is that we're invested in companies that are exposed to sustainable end markets. So if you think about a business, it might be a wind turbine business like Vestas, the Danish wind turbine business. Renewable energy is growing; it will continue to grow. Or in the healthcare space, we own a business called Thermo Fisher Scientific in diagnostics and testing. Again, at a time of global uncertainty, this business is seeing kind of a rising revenue stream and can provide that kind of comfort to investors. So I think that quality focus and that exposure to kind of sustainably growing end markets is really important. I would say, I think the future is even more exciting. we're seeing a couple of key trends come out of this crisis. So one of them being increasing focus on green infrastructure, for example. As there's more fiscal stimulus, more of it is green infrastructure. Yet the starting point is really low. If you look at kind of global renewable penetration, it's still below 10% in many cases. So we see the runway for growth being significant over the next 5 years. Or in another area, if you think about vehicle electrification, electric vehicles, the percentage of the overall fleet is still very, very low. But companies are really accelerating that move away from carbon intensive vehicles. We think that kind of the opportunity set over the next 10 years is really significant. So we benefited, but like I always say, we're very long-term managers, and we think that the future is really exciting.
That's great, David. Thank you for joining us today.
Thanks very much.
And if you'd like to learn more about the Rathbone Global Sustainability Fund, please visit FundCalibre.com. And while you're there, remember to subscribe to the Investing on the Go podcast. Please remember, we've been discussing individual stocks to bring investing to life for you. It's not a recommendation to buy or sell. The fund may or may not still hold these stocks at your time of listening.